Diesel prices have been on the rise again across much of the world, with Europe seeing some of the sharpest increases. A combination of geopolitical tensions, refining bottlenecks, and planned maintenance have all contributed to a tighter fuel market. To understand what's behind this rally, why some regions are more affected than others, and how refinery outages in Russia and Europe are adding fuel to the fire, I'm joined today by Alex Hodes, Director of Market Strategy at StoneX. Alex, great to see you again.
Great to see you. Thank you for having me.
Let's start with the rally in diesel prices. What's driving the move?
So it's really a contribution of several factors here. Over the past, honestly, several years, we've kind of seen these time periods where we've seen these spikes in diesel prices specifically. Diesel fuel inventories globally have been relatively tight. It's kind of a contribution of one being refining capacity globally had been kind of tighter overall. There has been some moves to kind of alleviate some of those issues, but in certain areas, specifically in Europe, where they are a big driver of the gas oil and heating oil markets, there's kind of a shortage of refining capacity. And right now we're seeing kind of a crimp on a lot of the refining capacity with maintenance schedules extremely elevated at this time of year. And in addition to that, we're seeing some Ukrainian attacks on Russian oil infrastructure.
So let's dive a little bit deeper into that then. Which regions are feeling the biggest impact from these price gains?
So I would say Europe is kind of the one that's taking the lead here with some of the larger refineries being offline right now. There's about 600,000 barrels per day that have been offline for much of October. They will be coming online over the next several weeks. So this could alleviate some of the pressures there. But Europe is being one of the big drivers of demand for gas oil. And that market is really heavily tied to the New York Harbor heating oil market. So when you see gas oil prices running up, you're seeing that reflected on NYMEX heating oil as well. And so there's kind of a little bit of a discrepancy there, but those are the two primary regions that are kind of feeling this tightness right now.
And why is Europe so exposed compared to other regions?
So over the past several years, since 2024, there's actually been 400,000 barrels per day of refining capacity that was taken offline in Europe. And that's kind of been one of the drivers there. So over the past several years, we've seen mostly new refineries being built in the Middle East and Asia and kind of coming away from that Northwestern Europe area. So that's kind of why they're seeing a confluence of all these, it's a confluence of all these factors, as well as them being exposed to Russian oil exports as well. So it's kind of a double whammy for them.
All right. And how significant in this rally? I mean, could prices go even higher?
Yeah, it's kind of one of those time points where you're seeing, uh, you're trying to identify where that top is, and a lot of times commodities markets with the momentum following that's in the market, a lot of hedge funds that kind of jump aboard when things are rallying. Those sometimes overshoot, and I'd say we are almost at that point already. We've seen prices rally 19% since the bottom in October on NYMEX heating oil side of things. And on European gas oil, it's closer to 23%. So I'd say we're up to the point where these this price rally should be at its peak, but it's hard to kind of determine what time point that is. But with refineries coming back online over the next several weeks, there is some factor, some fundamental factor that's changing in the near term that should be able to allow diesel supplies to kind of fulfill those shortages right now.
And what about Russia then? Because there have been several reports of refinery outages there. What's going on and how serious is that?
So it's very serious from a diesel point of view. So there's been kind of a range of reports of what the quantity of oil infrastructure attacks have been. They've Ukraine has really started. They've been attacking Russian oil infrastructure, particularly oil refineries, and over the course of time, there's been reports that they have knocked off 20% of refining capacity. But really, how we've kind of taken to analyze the actual barrels coming out of Russia is looking at kind of oil seaborne flows. So, looking on the diesel side of things, it's been around that 300,000 barrels per day that have been knocked offline with regards to exports. But then it's kind of a battle of time, a race on of time of whether Russia can really improve and fix these oil refineries in time to kind of get those back supplying the market. So it's kind of been a weighing of those two factors, but really um, it's a persistent risk that needs to be taken into account in the diesel market going ahead.
Okay, so that's Russia. What about Europe? What kind of refinery outages are we seeing there?
So there's several refineries that are offline right now. It comes to about 600,000 barrels per day. Particularly in Rotterdam, there's a large refinery that's offline and should be returning, I believe, next week or the following week, according to reports. And that'll return 400,000 barrels per day. And that's really going to be the big change point, in my opinion, in the market.
Okay, understood. And one last thing before we let you go. What should consumers and policymakers be watching for in the months ahead?
So I think the persistent lack of refining capacity has been an issue that's going to kind of be persistent in certain areas in the market, particularly uh, Northwest Europe, as well as the Atlantic coast in the US. So because these refineries are being closed down in those areas, as well as the US is actually closing down an additional refinery on the West Coast, there's going to be those times of the year where you're seeing kind of shortages, particularly on the refined product side of things. So going forward, it's a persistent risk. And what people should kind of pay attention to is where those inventories lie. So ahead of this winter, we we need to really refill those inventories and get to a comfortable level. And if they don't get to that level, then we're in for more pain points and kind of price rallies like this when any supply outages occur.
I see. Alex, thank you again for your insight and good to see you again. And thank you to our viewers for watching. For more financial content, don't forget to like and subscribe to our channel.